traders, Mark Chapman here, the creator of the trademarked Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 18th of January 2017. The trap we're going to look at today is a return into a trap. One of the ideas that I don't really speak about that much on the daily videos is that traps have like a double life. They've got two ways that you can approach each individual trading trap, and that is that not only can you trade the initial move away from the trap, so the trap occurs and then you can get involved in the move either up or down away fairly shortly after the trap occurs, or you can trade the return back to the trap in some cases, and this is one of those scenarios. So just to kind of highlight what I'm talking about, this is the trap in here, and this is it was the first trap I ever kind of got my head round to think of it in those terms, right? So what are traps? Traps are when you take a trade and you believe that it was a smart choice to take that trade, and then before you know it, you kind of blink and you're in trouble. Like, you are trapped essentially. Okay, and here's another a bigger version of the same thing. These are called outside candle traps, and the way they form is they go in the opposite direction first, very obviously, and then they reverse and then close down near their lows, taking out the highs and the lows of the previous candles as a minimum. So here we go. So here's the high of the previous candle. It clearly goes above there, right? Obviously it goes above all of these candles, and then closes below the low of the prior candle. Yeah, you can absolutely say it did that, right? We closed down in here. But it also took out several candles, and it closes near its low. So in real time, if you just will go up here because there's a bit more space, in real time, if I were to be able to draw this well, this is not going to look very good by the time I'm finished with it, but you get the idea. This in real time would have looked like a positive candle, so whatever colour you have for positive candles, mine are dark green, but that's the only colour green I've got to show you on here. This is what that would have seemed like. So you'd have had price making new high, pull back, and it would have looked very much as it broke to new highs that it's going to follow through. Okay, but it's doing it with a live candle, and the danger with that is that it can roll over and catch people from the moment it went positive, negative as well obviously, but in this example, from the moment it went positive to the open is where people would have been trapped in that time compression. So on a daily chart, which is what this is, the euro dollar, from the open, as this went up from the open, this is the whole area where people would be trapped in here. So this becomes the entire area, and as I said, if you were aware of this in real time, you could have played the move away from the initial trap, but you can also play, as I said, the return to the level, and it has a couple of things going on. The reason why you can do that is a decent trading setup, and that is that you know intuitively this to be true if you've traded for any length of time, that when you get into trouble in a trade and maybe you make a bad choice, we've all done it, this is why we're speaking from experience, we've all done it, and if you're honest with yourself, you've probably done it too. If you're brand new, this might not have happened, and hopefully you can stop yourself from getting into this situation. But a lot of traders, and if you've been around a while, you've experienced cancelling your stop loss, you've experienced adjusting your stop loss, making your stop loss bigger, right? I'll just give it a little bit more room is a common one. Anyway, the top and bottom of it is that you end up in a trade. So imagine you went long and you were hoping that was going to go up, but you find yourself down in here, and your original stop loss, let's just say, was under this level, right? But as price comes down to the stop loss, you think, well, I'm going to give it more room. I still like the trade, like weirdly, as if you'd think that. But maybe for whatever reason, you try to talk yourself into giving it more room. So you cancel your stop loss, and lo and behold, it keeps going down, right? So you find yourself down in here, and not very happy about that. Now, ask yourself the following question, and that is, if you're honest with yourself, has your motivation for taking the initial trade over in here, has that changed when you find yourself down in here, right? What's the psychology shift? I would wager that when you initially took the trade, yeah, I wouldn't say you were over the moon happy, but you were probably, it's a really bad drawing. Good job I can trade. Don't give up your day job, Mark. I wouldn't say you're overjoyed when you take a trade, right? I wouldn't say that's the feeling you have. You maybe have some type of expectation of a positive outcome, right? Maybe you're fairly neutral, well, hoping the trade goes your way, that kind of thing. And really, money's on your mind, right? You believe in that your setup will work long enough in order for you to take some money out of the markets, right? So that's where you start off. But if you find yourself in this situation and you've gone through that process of cancelling your stop, and you're literally holding the biggest amount of paper loss in your account that you've had throughout this entire experience, your motivation has shifted. Your psychology shifted first and foremost, and that's changed your motivation for the trade, for the outcome of the trade by default. And as I said, a lot of understanding the psychology of markets and things is really a true reflection of your own experiences as a trader. You know what I'm about to say is true if you've been around a while. And that is that it's not about making the money at that point. It's about bailing on the trade at break even if you can possibly get back to break even. It's commonly understood that the second best trade in the book is a scratch trade, right? A break even trade. You nix the trade, you move on unscathed, and you live to fight another day. That, I would suggest, is the individual's motivation. Not everybody, but generally speaking, we're trying to think of like the herd mentality, right? The mentality of the masses. We're trying to trade against them, and we're also trying to understand them, put ourselves in their shoes. We do that because we've been in their shoes. That's how trading traps really works. So if then I can put myself in the shoes of this individual, and I can say with a certain degree of confidence that they're about the break even now. It's not about making money. It's like, goodness gracious me, can I get out of this one alive, without telling the missus or the husband, right? Oh my goodness, I'm about to blow the family holiday money on a stupid dumb trade, right? Please let me get out of this at break even. Almost hoping and praying that it comes back for them. And unfortunately and sadly, the reality is that for a lot of people it won't come back, and that obviously ends in tears. But if they get the chance, this is my point, if they get the chance, they are highly motivated individuals. They were motivated by money initially. Down here, they are motivated by a break-even result, right? A break-even result would be considered a result, just that, right? It would be considered an absolute brilliant outcome for them, given where they've been. So when you're looking at price action, don't just look at price action, think patterns, and don't realise that there's a human cost, there's a human element to price action. And if you can put yourself in the shoes of those individuals, then it then follows that you can understand where prices may act in a certain way when they get to those areas due to the behaviour of those market participants. Meaning, if you had a bunch of people down here that took this trade originally and find themselves down in here and get the opportunity to get out of break even in here, what are they going to do? Right? As we've discussed ad nauseum now, they're going to bail out of break even, right? So if they bail out of break even, and they were a buyer over here originally, the only way that can occur, the only way that transaction is possible, is if they sell to exit at break even, right? Interesting. So what? Now we know there's an area where there should be some selling occurring. That's interesting. That's potentially profitable information to learn, right? So that's literally one area of how we understand why there may be some supply and demand in certain locations. There are obviously other dynamics afoot and other situations that we try and have in our favour when we analyse the markets in this way. The cool thing about trading traps and these essentially these hacks of everybody's trading strategies that I've been doing now for goodness well over a decade now, probably in my 14th year, I think, is that it's evergreen. It's never going to change, right? So someone will come along with this, you know, shiny new indicator or tool or whatever, bit of software, and you know it maybe has a modicum of success, and then it stops working. Markets change, things like that. But human behaviour is constant, and it's extremely predictable by and large, but very much so in the financial markets when money is on the line. It's extraordinarily predictable when a human being finds themselves in a situation in the financial market. So what's absolutely fantastic about this way of analysing and participating in the financial markets, of course for any market, I just happen to be an FX trader, is that it's never going to change. It's never going away. It's not suddenly going to be here today, gone tomorrow. It's forged, if you like, in human psychology, and that's going to be forever constant. So if you'd be interested in learning how we kind of go about all this, and intrigued as to what trading hacks and traps are all about, then click the link below. Come and join me in my inner circle, where I will show you and teach you how to trade this stuff. You know, I trademark this. As far as I'm aware, I'm the only person on the planet really who has this level of understanding of this particular niche of trading. You know, if you talk to me about GAN theory, I could barely spell it, never mind trade it. But that's good, that's okay, that's life, and you know, the world's full of specialists. GAN traders couldn't trade the way I trade, so we all have our own niches and our own specialities, and this is my speciality. It's been taken up by some of the world's best and well-known hedge fund managers who back the concept. So it's not a joke, it's not some nonsense, it's proper information that you'd be learning, and a skill for life as well. So if you like the content, make sure you click the like button below. Importantly, share it with your trading buddies. I know you've got at least one trading buddy. Trading is an individual sport most of the time, but you do all tend to have little Facebook groups and forums and Skype chats and groups and things like that. I'm sure you've got at least one person you can share this video with, so that they can benefit from this information as well. Just trying to get the information out there, and also, you know, presenting every day as best as I can as much value to you as possible, so that you see the difference in what I'm talking about. It's not the norm. It's not what people generally talk about when they are referring to the financial markets. So if you'd like to learn more, definitely click the link below. Come and join me in my inner circle, and I'll look forward to seeing you there. But getting back to this particular setup, what's going to happen as we've discussed is these people are going to bail out, and that's going to create a supply in here. And there are other reasons why there's supply in here as well, but we're kind of running short on time. So this looks like a pretty decent place to look for a short in and around the 1.2 1.0 sort of 90 level, something like that, down to the 1.07375 type area, something like that. Stop, go above there. I'll have another go at this in this area as well, because that is a beast of a trap up in that area. So keep an eye on that. Fundamentally, although there has been some sentiment which has created weakness in the dollar in the last couple of weeks, fundamentally nothing's changed. We've just raised interest rates in the US. Europe's heading into a very, very tumultuous period, with some major referenda coming in the coming months. So I can only see further weakness in the euro. The fact that it's rallied against the dollar, and pretty much everything has rallied against the dollar recently, doesn't change the fundamentals. Sentiment is not fundamentals. Sentiment is short-lived, and the good news with sentiment is it draws prices to the savvy trader who has that fundamental bias, because where everyone else is saying, you know, there's dollar weakness, why would I be not getting involved in that? I see that as an opportunity to allow me to buy dollars at a cheaper price, right? And that makes me happy. And then those traders get creamed as the fundamental trend continues. So we've just raised interest rates in the US. There's no chance that that's not going to follow through in the coming weeks and months. So yeah, if you'd like to learn more, click on the link below, and I'll see you there. Take care now.